Hi everyone, so welcome to Investing for Value. So today I've got innovative industrial properties going by the ticker code IIPR. So the share price is selling for $98.96, giving it a valuation of close to $1.7 billion. But first, why do I compare this to McDonald's? Well, if you haven't seen the McDonald's movie, I strongly advise you go see it right now, or just after this video anyway. And then you'll understand what I'm talking about. So McDonald's, when they were starting, the business was hugely successful, though they found when they franchised it, the franchising fees barely covered the overheads of the head company. So then they thought, well, we've got a hugely successful business. So if the business is good, we place the business on top of our very own land and we rent out that land. This gives us, strong, predictable revenues, and then which translate really well to the bottom line, because at the end of the day, you own the property, you get rents from it, you manage it, and it's as simple as that. So how does this company relate? Well, it essentially is doing what McDonald's is doing, except for it's doing it for the medicinal cannabis industry. So one thing you might notice right now is cannabis stocks are dropping through the roof, and they're losing a lot of money. So what a lot of these companies have resorted to is they're selling their assets, and the one company buying these assets is this one. So this company buys the facilities off these companies, which are already pretty much set up. But they do offer a little bit more incentive to, put on extra extensions and all that, and this company funds it, but they do it at a really good return. So right now they're getting a return of 13.3% on their investment. So if you can get 13.3% on your investment, you'd be really happy. And this is like rental income. So like their main expense is their own overheads and just managing these properties. So you look at it that way, that's extremely good return. So that's why, like, we look at, say, like dividend returns, how's this company in the last 2 years managed to pay out quarterly dividends from 25 cents to currently $1. So in 2 years, dividend has gone up by 300% or 4 times, which is incredible. Would we say this is going to continue in this trend? It looks likely, because you look at here, 25 cents, 25 cents, 35 cents, 35 cents, 45, then 60, then 78, then $1. So it hasn't even, every quarter it's gone up. This is how strong this company is in terms of just being very opportunistic around this area, which is growing really quick, because cannabis, in terms of the regulated industry, because we can look at the other industry which isn't regulated, but in terms of the regulated industry, in 2018 it was 10 billion. In another 3 years' time, it's forecast to go to $30 billion, which is extremely high. So everything's in your favor in terms of like offering these assets to businesses, because they're going to be high demand, particularly when it just, when you've got such a huge growth on its way. So they currently have 46 properties, and the average lease term is over 15 years. So like you can kind of sleep peacefully knowing that your lease terms are 15 years. Though if we look at the bad situation and go, the business that's leasing the property goes under, well, given we've got this growth rate, they're not going to be short of companies wanting to lease these properties. So in terms of that, they're a really, really good safe bet in terms of like a fast growing industry, a lot of people, a lot of tenants, and they've also got a lot of room to just continue buying properties, because they only own 46, and I guarantee you they can own probably 100 times more than this, and they'll still be fine to keep growing. Which kind of is a big signal from the company, because they recently raised $250 million to keep continuing this growth. So currently they've spent close to about 550 million around there. And I've managed to basically buy up 46 properties, that have a minimum rent of close to $59 million. And in their terms, rent goes up 3 to 4% every year. So like if you imagine these terms, they're great terms. You're getting a yield of 13.3% on the current investment. Then every year after that, it goes up 3 to 4%. And also they've got cash in the bank to continue this growth. So when you look at this, it kind of feels really good, particularly when you look at this. The company expects to at least pay out $1 every quarter going forward, which on a share price of $98.96, that's over 4% return. So when you look at that, you've got a 4% return, and it's going to be growing as it goes. So in terms of a long-term company in a really good, strong industry that's growing, with a strong portfolio, you can kind of rest assured that things are going well with this company. So that's kind of what I'm seeing. I think, like for anyone that's interested in dividends or interested in capital growth, this is definitely a company to put on your watch list. Though you might have different opinions, though let me know what you think. Like for me, like this company seems to be ticking all the boxes in all the right areas. So like I've got this quote from Ray Kroc. He says the two most important requirements for major success are first, being in the right place at the right time, and second, doing something about it. So this is a company right now in the right space. This is a growing industry, and they're doing the right things about it. They're going to the properties, like a lot of companies are heading into the cannabis space. They want to grow the stuff, they want to sell the product, but right now we're finding there's a huge supply, the pricing's not matching up, and these companies have just run large overheads and are losing a lot of money. But whereas this company, they're taking on the assets and they're leasing the facilities. So this is a profitable company basically from day one, which is kind of reassuring, particularly if you want a reliable investment that's also growing really quick. Because if you're getting a 13.3% return, regardless of where you get it, and it's guaranteed, essentially guaranteed, unless the companies go down, for 15 years, which is a strong return. So in terms of that, like I think I'd definitely be a buyer of this stock. It's really only come onto my radar like really recently. So shows that like if you just look around, there's definitely opportunities available. And this is a company that, even though it's gone up 50%, is still offering extremely good value. So in terms of that, yeah, I think basically that's all I really want to detail on. It's a really comprehensive company. If you got any more questions about it, just let me know. But it's pretty straightforward. It buys facilities off other cannabis growers, rents it back to them, does a few extensions, and then they can charge some high rents, and it's just repeat the current process, and then just basically you just have to watch the dividends go up. Like you just have to watch these dividends and the nice straight line it's just going in, and then basically if dividends goes up, basically it's because of rentals. If rentals goes up, the share price takes care of itself. So in terms of that, this is a strong company. Like nothing gets stronger than property. So my association with property is that it's usually not the highest returns. But if you're able to get like these returns, those are very high commercial returns. Then I'd definitely say like it gives me a lot of confidence in this company that I'd certainly be looking at taking a position in this company. Like you don't necessarily have to buy a lot of this company. Like you can always buy a little bit. If the price comes down, buy a bit more. Though at this pricing right now, I think it's pretty fair value. Like 4% dividends, it's all right. Like I'm not really a big dividend buyer, though you might be, and if you are, 4%'s pretty good these days in an industry like this, and especially with the growth. So yeah, I think that's but I'm looking more at the capital growth of the share price, and yeah, I think that's looking like a great company. We can just see how things go in the next 3 months. Because in the next 3 months, we'll get another dividend update and look at the financials. Hopefully, they've spent a bit of money on more growth as they go. And then, yeah, but I think out of a lot of companies that I've looked at in this space, this one is definitely primed to be growing in it. Until then, good luck investing, everyone.